So we'll begin our meeting. Obviously, to switch off the mobile phones completely, as the vibrations, even when they're left in silent mode, affects the broadcasting transmission adversely. Can we now go into private session? Is that agreed? Agreed. Public session, and the next item on the agenda is a discussion with Mr. William Bosang, Assistant Secretary, Department of Finance, in relation to the regulatory reform and in the financial sector. I would like to welcome William Bosang, Assistant Secretary, Kevin Cardiff, Second Secretary, and John Horgan, Principal Officer from the Department of Finance. At the outset, I'd like to draw the witness' attention to the fact that members of the committee have absolute privilege, but the same privilege does not apply to witnesses appearing before the committee. Members, of course, are reminded of the long-standing parliamentary practice that members should not comment on, criticise and make charges against any person outside the House or an official either by name or in such a way as to make him or her identifiable. I now propose to hear a short presentation from Mr. Bosang, and that will be followed by questions and answers from members of the committee. Is that agreed?
I wish to thank the Joint Committee for giving the Department the opportunity to appear before us today to discuss recent progress in relation to regulatory reform in the financial sector, and in particular the establishment of the new institutional framework for financial regulation as announced by the Minister for Finance on the 18th of June last. The negative impact of the international financial crisis on the banking system in Ireland has emphasised the importance of the framework for financial regulation to the real economy and the critical links between financial regulation, financial supervision and financial stability responsibilities of the central bank. The range of reforms announced by the Minister are expected to underpin a much more effective and efficient financial regulatory regime. The key change to the regulatory framework is the establishment of a single, fully integrated regulatory institution, the Central Bank of Ireland, which will be responsible for both the supervision of individual firms and stability of the financial system generally. This will replace the current two-pillar structure currently operating within the Central Bank and Financial Services Authority of Ireland, comprising the Central Bank and Financial Regulator. The proposed new Central Bank of Ireland Commission will be chaired by the Governor of the Central Bank. It should be noted that the Governor will retain sole responsibility for the performance of the functions imposed and the exercise of powers conferred on the Central Bank by or under the Rome Treaty or ESCB statute. Consumer confidence is vital for the financial services industry. Within the new regulatory structures, the consumer information and education role currently carried out within the Consumer Directorate in the Financial Regulator will be reassigned to the National Consumer Agency, which is being amalgamated with the Competition Authority. The functions to be merged in the new body are highly complementary and share a common goal of enhancing consumer welfare. Regulation for consumer protection, including the development and enforcement of codes of practice, will remain within the Central Bank of Ireland as an integral part of conduct of business regulation. It should be noted that the proposed reforms will not impact on the current separate statutory role of the Financial Services Ombudsman. Within the new Central Bank of Ireland structure, it is proposed that 2 top-level posts will be established as ex officio members of the Commission. The Director of Central Banking will report to the Commission on the performance of central bank functions by the Central Bank of Ireland, other than those functions that relate to the independent role of the Governor I highlighted earlier. The Director of Financial Supervision will report to the Commission on the regulatory and supervisory functions. The process of recruiting the Director of Financial Supervision is already underway, and the position was advertised nationally and internationally last week. The search being undertaken is wide-ranging to ensure that the successful candidate has the necessary reputation, experience, abilities and expertise to lead the reform of the regulatory structure. In addition to the recruitment of the Director of Financial Supervision, the reforms will also be supported by a significant expansion of regulatory capacity within the Central Bank of Ireland. Additional new staff with the necessary skills, expertise and experience to meet the objectives of the new regulatory structures will be appointed. 2 Assistant Director positions were already advertised last week. Earlier in June, a range of specialist positions were also advertised and the associated selection process is progressing. To expedite the implementation of these reforms, the Minister for Finance has established a high-level group chaired by the Department and including representatives of the Central Bank and Financial Regulator. The group will also undertake appropriate consultations as part of the implementation process. Within the CBFSAI, the current functions of the Central Bank Board and the Regulatory Authority are currently being aligned as far as possible within the existing framework in advance of the full implementation of the regulatory reforms, which will of course require legislative changes to governing legislation. The legislation to implement the reforms will ensure appropriate accountability of the new regulatory structures to the Oireachtas, while assuring regulatory independence, as well as strengthening the evaluation and quality assurance of regulatory performance. In addition to the changes to the domestic regulatory framework which I have outlined, there is significant work underway at the EU and international level to improve the financial regulatory architecture. Developments domestically must be aligned with emerging international developments, ensuring our regulatory framework remains in line with best practice internationally. The reforms outlined are consistent with the new arrangements proposed at EU level and should ensure a cohesive approach between critical elements of effective financial regulation. My colleagues and I are happy to answer any questions the committee might have on the new financial regulatory structures.
Okay, thank you very much, Deputy Fergus O'Dowd.
Thank you, Chairman. I'd like to welcome the Department of Finance here today. And just very briefly, we've gone through a very tough period nationally and internationally in terms of the way our finances have been, I suppose, abused by the banks and the reckless lending that has gone on and the lack of oversight, or when the regulator has been informed that there hasn't been the effective action that people who would have complained to the regulator would have expected. So how much more robust are the proposals that are coming here, which the Minister is making? How much more, what credibility, what extra strength, or how will we know that you're doing your job, basically? Like, we assumed that the job was being done by the regulator and by the central bank, and clearly it wasn't being done. So what more transparency and accountability will there be there?
Deputy, it's certainly true to say that there were shortcomings in the regulator. I think the regulatory authority has acknowledged that itself. They're signed up to and anxious for reform. Central Bank itself is signed up to and anxious for reform. I think there's three things that are important. The first is the structure. Maybe come back to that in a sec. The structure is very important. The second is the culture that operates within the structure, and the third is the availability of the right skills within that overall organisation. I think the presentation we've just given is mostly about the structure. If you like, just looking back at the last very difficult year and a half or so, if we look at what the strengths and weaknesses of the response of the regulatory system to what was, an unprecedented crisis, and hopefully one we won't go through again, but looking at it under that much strain, there were some strengths. One of the strengths we found, especially earlier in the cycle, or in the crisis period, and relative to what people were telling us in other jurisdictions, was the fact of the two entities, the financial regulator and the central bank, being part of the same overall structure. which meant that the people concerned were geographically close to each other, were known to each other, were able to exchange information smoothly and so forth. But I think the lesson also that the Governor and others are trying to put forward really is that even though that might have been a strength relative to where other countries where it wasn't a strong enough one, that in fact they feel, and there's the evidence I think is in favour of it, they feel that what we needed actually was even better integration, especially maybe at an earlier stage.
The point I'm trying to get at is that, right, there was reckless lending going on in the banks. There was, completely and utterly inappropriate actions by different companies. There was, there was 100% mortgages, 100% plus mortgages. The whole system was geared up to a collapse. And, what I'm saying is, how do we know what's new that will stop that happening now? I appreciate the relationship between the different structures, but what's changed? Like, what has really changed? Will anything change?
Well, the proposition is that the structure will be adjusted so that the responsibility for regulation and financial stability, including all those issues of sort of looking at the thing from a macro-prudential point of view, and the bringing together of the issues of regulation of individual institutions and the looking at the overall system. That those two things.
100% mortgages that came in at one stage. Now, and I'm not being political about this in a party political sense, but like that was very bad for the economy. But nobody shouted stop. So, will you shout stop? Will this new arrangement be more of the same? I'm just trying to get from you, is there a new dynamic here?
The point is that the proposed legislation will allow for a structure that will allow for that new dynamic. What I was really saying was that the structure in itself is very important, but is not the only thing. I suppose that was the only point I was trying to make. But the new structure will allow for the Governor and the Central Bank Commission, the board being the Central Bank Commission, to have an oversight of the whole picture. So they're not just looking at whether 100% mortgages are a prudent thing for a particular institution to do. They'll be able to say, well, look, within the context of the whole system, that's either that's not a positive, and therefore we should be taking an action, and that the whole structure will be more integral and therefore better geared to taking a systemic overview, not just an institution by institution.
The last point I want to make is that we had a witness here, Mr. Eugene McIlaren, a few weeks ago, and I appreciate you're not the financial regulator. But the point was that he made complaints which were never actually followed up. And it seems there was incredible abuses going on in part of the system which he knew about, which the regulator knew about, and nothing happened. And it's just, I respect your professionalism, but I can't say that I'm riveted by what you're saying. I don't want to be rude, and I'm not trying to be rude, but I'm just trying to say, I don't see anything really different happening now other than the two organisations merging, the regulator and the bank, really. And what are you really saying until the legislation comes in, that's the way it'll be? It'll be just they're in the same room now as opposed to not being in the same room.
No, actually, no, it's not unfair. It's a very valid point, and I suppose that's what I was trying to hint at. Legislation tends to deal with structural issues. It tends to. I mean, you can deal with other things, but that's not all that's going on. At the same time as the legislation is dealing with the structural issues, there's a process of recruitment of a new chief executive going on. There's a process of recruitment of new senior managers. I think the ads are in the paper for that last week or the week before. There's already been an appointment of, I think it was 20-odd new sort of banking specialists from the brought in from the private sector earlier in the year. There's more of that going on. I think there's a process for another 20 at the moment. There is a soul-searching process, a Mazars report within the regulator, and so forth. So I wouldn't come to the committee and say that all that's changing is the legislative regulatory structure. That's changing, but that's not all that's changing. And obviously, If that was all that was to happen, that wouldn't be enough. But there is an extensive process of change going on. I have to say, though, it's going on at a very difficult time, and at a time when there's very significant day-to-day distraction from the longer term for very obvious reasons. So it would be a fool who'd say that the process will be entirely smooth. As regards the specific case you mentioned, I know that there's that the regulator was probably in with you and had some answers to those questions. So I didn't see the transcript, so I don't know whether you were satisfied with those or not. But I'm
not satisfied, but that's not. That's your good self.
I suppose the point being made by Deputy O'Dowd, is the economy, and there's an awful lot of people hurting from what went on over the last number of years. And what we really need to see is absolute draconian regulation and legislation to make sure that what has been visited, not just here, but and particularly here, will never again be allowed to happen. And I think that's the point. Senator Paul Coughlin.
Thank you, Chairman, and I welcome the representatives of the Department here as well. Could I ask just two brief questions? To what extent have the non-guaranteed and foreign banks pulled up their drawbridge, so to speak, in terms of lending to Irish customers? Would you not agree that they're merely concentrating on preserving capital rather than lending in order to assist in getting the economy going again? Number one. And two, there is a national interest in terms of ensuring that unsustainable debt levels aren't created while at the same time freeing up lending for purchases. Are you sure that Irish financial institutions are providing adequate data on credit details to the Credit Bureau? Those two questions.
Thank you.
On the non-Irish, or in other words, by that you mean those
covered by the scheme and the foreign-owned ones, yeah.
But the retail ones, the Ulster banks and
yes, all of those.
Well, we don't obviously define their commercial decisions, but I think you have to think in terms of what does a bank these days need to lend, especially a subsidiary. First thing it needs is a availability of capital, which is being destroyed somewhat at the moment because of heightened impairments. So capital is an issue, but just as important an issue is availability of liquidity. And just as the Irish system was running short of liquidity, thus prompting the guarantee, UK banks, they've had guarantees, so they clearly have liquidity issues. French banks, Danish banks, banks all over Europe are short of, of both the risk-absorbing capital, but also of the sort of the cash to make loans. And then the third thing you need, obviously, if you're a subsidiary, is the mandate from head office. Now, I have no evidence to say that the mandate from head office is lacking, but it is probably the case in almost any financial institution that loan decisions are being made much more carefully. It is the case that relative to, for example, mortgages, relative to what maybe the guaranteed institutions are charging, some of the others are charging a good deal more for mortgages, which might imply either A, that they're trying to set their competitive position such that they're not particularly anxious to make loans, but it also might be as much to do with the strategic position of the parent. And we might look at what the parent is doing in its home jurisdiction and find that actually what they're doing in Ireland isn't that different. So there are obviously a variety of constraints that apply to lending at the moment, and obviously we're very anxious that the Irish banking system is put back in a position where, first of all, it can have adequate liquidity and adequate capital to both maintain the loans it has and continue to do that into the future. We are about to, well, I haven't read it in detail myself yet, but we have just received a report that was commissioned as on foot of the recapitalisation of AIB and Bank of Ireland, but it deals with credit availability for the SME sector, and it will deal with, we've extended it beyond just AIB and Bank of Ireland, so it will deal with some of the other institutions as well, and I think that'll be ready. I think that'll probably be published fairly shortly. Oh, sorry, the other question was Credit Bureau.
Senator, in terms of the question you posed on the Credit Bureau, the Irish Banking Federation have a process underway at present, which I understand is examining how best to ensure that the Credit Bureau is supporting the banks in making prudent and responsible lending decisions, and it has, appropriate information provided to it by the banks to support that objective. We'd be aware that there are important issues to be looked at. I think in the context of that review, looking at the provision of information, the depth of information provided to the Bureau, and issues around external validation of its processes, and the credit evaluation tools that it uses. So it's a piece of work that in the department we are interested in, and we'll be reviewing the outcome of that work, the results of that work closely, to make sure that the Credit Bureau is playing an effective role in supporting good lending practices, because obviously from the point of view of a consumer, they shouldn't be lent to if they are overextended. On the other hand, they shouldn't be denied credit if they are in fact a reasonable credit risk. From a regulatory perspective, obviously, sound prudential regulation is supported by a system which ensures that banks have the information available to them to make good decisions. So it's certainly an area that we have an interest in, and we'll be monitoring carefully.
In regard to Mr. Cardiff's reply, as far as you referred to the AIB and Bank of Ireland situation and those covered by the guarantee scheme, are you satisfied, because all the anecdotal evidence is to the contrary, that the main banks are not providing what was agreed in regard to SMEs or indeed mortgages? And that was something that the government and all of us were very concerned about. What would you say in regard to that? Because even though it's in place now for quite a considerable period of time, as I said, the anecdotal evidence is that they're effectively not assisting the economy.
Getting to the absolute basics, Senator, what we need for the economy, first of all, is it has a banking system that is stable and capable of maintaining itself. And various efforts of government have been made to ensure that, including the guarantee and their capitalisation and so forth, and what we're going to be doing on them. So there's an awful lot of work being done just to make sure that basic thing is happening. In terms then of the recapitalisations of the two larger ones, there were various commitments made about availability, making available pools of credit. And we've no evidence that those pools of credit are not available. The question then is whether the pools of credit being available, the actual loan decisions are being made in the appropriate way, so that where a good prospect, let's say, comes to a good prospect comes to a branch manager and so forth, is that getting the hearing it deserves? And as we understand it, first of all, you asked about are the statistics good enough? Well, no, they're not, which is why we're doing this, why we just had this study commissioned, which will be interesting. As I understand it, it's likely to say that there is a difference in perception, or at least there's a difference between what the bank's own statistics show and what a very large survey, I think of 1,000 businesses, what those people are saying in terms of the response that they got when they went looking for credit. But it's not a huge, as I said, we've only just received it, so I haven't read it in detail. It doesn't seem to be a huge disparity, but there is a disparity, and that obviously is to do with, it's presumably to do with the difference between, the actual formal credit application and how that was dealt with, and whether that was agreed or not agreed, and so forth. And of course, what happens when you go to the branch and you say, I'm going to be looking for money, and does the guy say, no point even applying, or does he say, well, you can't apply? And in other words, there is probably an informal process in almost all business negotiations before you get to the formal. So there may be a disparity between the informal and the formal. But as I say, we'll be examining that report in detail. It'll be published very shortly, and that will give us hopefully a better handle on that. But it is always difficult to reconcile anecdotal evidence and the sort of the statistical, which they don't always seem to show the same answers. The other thing that has been done is that the government has established a sort of a clearing group, so that interest groups, industry groups, and so forth that are aware of either patterns or significant individual instances of cases where credit that should reasonably be granted is not being granted, can refer, can sit in the same room as the bankers and so forth, and actually try and what's the phrase, work those issues out together. And that is being chaired, has been established, and is being chaired in the Department of Enterprise, Trade and Employment. It's established about 4 weeks ago, 3 or 4 weeks ago.
That is absolutely vital, because the truth is that even though recapitalisation has taken place in regard to both of them, whether you go on the data or on anecdotal, we're not getting the assistance that the productive economy, so to speak, needs. And it seems to me that until NAMA is in place and they receive further relief and further assistance on the capital side, that we're not going to have the lift off that we need. And we have no hope of seeing the green shoots before NAMA being in place. And as we know, the market abhors a vacuum, and until that is done, and we seem to be engaging in delay, if I may say so. And how would you comment on the progress in regard to the setting up of NAMA?
We're certainly not engaging in delay.
Or should I say the lack of it?
Well, no, I don't think you should. There is a huge volume of work going on that. Legislation is in preparation, is at an advanced stage. Hopefully it will be published this month. At the same time, there's a very detailed practical exercise going on, which it obviously isn't visible because it's preparatory work, but there's huge amounts of it going on, and it is far from being sort of nothing happening. It's one of the most concentrated exercises I've seen in the public service. But it doesn't bear fruit until it bears fruit, and the first fruit will be the legislation, which will be very shortly. I do, though, agree that the market, like everything else, abhors a vacuum, and moving that quickly is an absolute priority. Yeah, but it is quite honestly, Senator, it's been treated that way. I mean, it would be nice to think that you could sort of double the resources and do it twice as fast, but actually it's not quite like that. It's not that kind of process, but we are working very hard on it, and we are both in the NTMA and ourselves, addressing the resources as the issues that need resources come up. The NTMA has appointed advisors on various issues, on valuations. I was at a meeting last night where the HSBC and an in-house valuation expert that NTMA have brought in the last few weeks, where working through the process of how you value individual loans, what the different approaches would be, how they would be dealt with, how they would be negotiated with the European Union, which will have to approve all this. At the same time, there was discussion on the legislation and what problems that people were sort of suggesting might arise that have to be dealt with. There were some legal experts there to deal with company law issues and how they might interact with the NAMA legislation. So all those things are going on. They've all had extra resources applied to them, as the point came where resources could usefully be applied. And I think I'd like to say you'll be delighted with the outcome, but you'll certainly, I think, be surprised by the sophistication of the outcome when we have the legislation and when we have other the practical stages in place in the early autumn.
Thank you, Chairman.
Thank you very much. Senator Shane Ross.
Thank you very much, Chairman. Thank you for coming in. I wonder, could you help me? I'm just an initial question. You're the kind of financial regulatory unit, is that right? What do you do?
We do a huge amount, everything from dealing with the legislation that deals with deals with the financial regulatory structures, dealing with the.
What do you mean by deal with, though? I mean, do you advise on it? Do you draft it?
We do advise and draft, yeah. Advise the minister. We send teams out to Brussels to negotiate the various things that are happening in Brussels, which are very detailed. Draft the transpositions of those directives. Do some of the the contingency work on legislation that we might hope that would never have to be used, but nonetheless needs to be prepared. Do a lot of the discussion with the minister, and provide advice to the minister and so forth on the crisis management exercises and so forth that have had to take place recently. We, in that, draw on resources from both in-house, from the NTMA, from the NTMA's advisors, and so forth. So it's really quite an awful lot. Quite a lot goes on. It's some of it mundane day to day. Others related to the current crisis.
And do you think that, therefore, do you think you have a responsibility for what happened pre-September the 30th?
Well, we certainly, yes, absolutely. I mean, there's no doubt that we had various responsibilities as advisors to the minister, just as as the department and the minister had responsibilities, and the government and the Oireachtas have responsibilities. So all of us were part of what was going on both prior to and since September 30th.
Did you advise that the economy, the property market, was going out of hand?
Well, I think we certainly, as a department, would have taken an economic view on where the economy was going.
Did you advise that the banks and the property market were going out of hand, that things were very, very bad in 2007 and 2008, and that something urgent had to be done about it?
Well, in 2007 and 2008, we would certainly have been doing contingency work. Let's say in 2008, in August 2007, Northern Rock became a feature. In 2007 and 2008, there were increasing liquidity pressures in the banking system, and we were certainly tracking, monitoring, advising on, and doing contingency work.
What I'm trying to say is, the financial regulator has taken a lot of flack for all that happened, and so the politicians, so the banks, and everybody else has taken their fair share. Is there not a reason for believing that you should have blown the whistle yourselves, as people who have the information, and as you say, are monitoring everything that's happened, and said, hey, look, this economy is going out of hand, the banks are lending far too much money for property? Did you do that?
I think actually that's a role in the central bank and the financial regulator, but we were certainly, as a department, have an overview role in relation to the economy. I don't think any...
But you are regulators, you're advising on regulation.
No.
Aren't you the regulatory unit?
We're advising on regulatory structures and how the regulatory structures might operate in the Irish economy.
Okay, so
the regulator is not us. The regulator is the financial regulator and central bank system. Now that's, I mean, I don't want to say that as things change, obviously that can change, but that was the position at the time. But are you saying that it would have been nice now to be able to look back and say that we saw with clarity what was likely to happen, and we stopped it? Obviously, it would be.
But yeah, that's right. But I think what I'm trying to establish is this: the financial regulator obviously gave extraordinarily bad advice about what was happening, and believed in this amazing, what they call principles-based system of regulation, which obviously didn't work, and the economy and property market got out of hand, and rightly has been upbraided for that to a certain extent, and so the banks were allowed to do so. What I'm trying to establish is what your relationship with, what the Department of Finance, I'm not talking about you personally, but the Department of Finance and your relationship with the regulator was, because it seems to me, as you say, you're monitoring, you've got all the information, right, that everything is happening. You've got more information than anybody else. What I'm trying to establish is whether the Department of Finance should have raised the red flag and said, look, this economy is going downhill very, very fast and we're in danger area. And it looks to me as if the Department of Finance didn't do that. Maybe someone did. Maybe you can tell me. Did someone go to the minister and say, look, we've got to do something. The banks are out of hand. The developers are out of hand. Did you do that?
Senator, as you know, we don't come into committees and discuss what we did or didn't advise individual ministers. It's just, it's not the convention.
It may not be the convention, but I think we're entitled to know what the answers are.
Well,
yeah, we don't give a hoot about convention in here. We want to know the truth.
It's not the convention. But
I don't give a hoot about the convention. I'm asking you a question. I want to know the truth.
Let me finish then.
Yeah.
It is not the convention to discuss individual toings and froings between ministers and the department. But I would imagine if a minister had a detailed advice from the Department of Finance saying that the banking system was out of hand and was about to cause great distress, that any minister would have acted on it. So I think maybe you can take from that what the answer is.
Finance gave no warning.
And that's not quite what I said.
I'm not talking about personal or individual.
I know you're not, Senator, and this is, don't get me wrong, this is a hugely important thing, and I'm not trying to step out of the way of it. But when you said we had more advice and more information than anybody else, that's actually not the case, because the Oireachtas, on the government's advice and with the, and undoubtedly unofficial advice too, set up the regulatory system as an independent system and gave it a remit. And the Department of Finance, respecting that independence, did not try to do the job itself and did not at any stage that I'm aware of seek to duplicate the role of the regulator in sort of being the whistleblower on these things. So there wasn't a, other than the sort of the general oversight of the economy, there wasn't a unit within the Department of Finance that was that had all this information and was tracking it. That was the independent role of the regulatory system. And the regulatory system was set up so that there was a sharing and could be a sharing of advice as between the within the central bank system, between the regulator and the central bank. Now, we were, I suppose, aware of that as a potential failing, and in the, I think it was 2007, I suppose as this stuff was starting to become more important, we set up a thing called the departmental, or the domestic standing group, domestic meaning within the jurisdiction, which is something that I think pretty much every European country did. And the domestic standing group was intended to allow for a greater exchange of information between the economic, the people with economic responsibilities in finance ministries around Europe, their regulators and their central banks. And in that domestic standing group, certainly there was an awareness of a building issue. And that was evidenced by, in particular, things like liquidity flows and so forth in 2007 into 2008. And that actually turned out to be a very useful thing, because it meant that by the time that we hit a real crisis period, we had procedures in place that allowed for a greater exchange of information, that we had sort of a self-reinforcing series of actions that had allowed for greater preparation for crises and so forth. There had even been, for example, what would you call them, simulations of what happens if a financial institution gets into difficulty, what are the responses? So we'd have sat down and run through a scenario, that sort of thing. So there was a good deal of preparatory work. But I don't think anyone, either in Ireland or, from what I can see in other jurisdictions, anticipated, could have, is a different question, which maybe outside commentators are better able to talk about. But as a matter of fact, I don't think anybody, either in Ireland or in most, at least, of the other jurisdictions that I'm familiar with, anticipated or predicted the scale of the dislocation in markets that occurred, especially in part in 2007, but especially into the middle and into the autumn of 2008.
We had a special problem.
We had a
special problem.
We had
in Ireland, it was up to us to warn
well,
of our individual problem, particularly on property and banking.
Everybody had a slightly different problem. In the US, it was a subprime problem. In other jurisdictions, it was overexposure to complex financial instruments. In Ireland, it was overexposure to property, and it would certainly, as I say, in retrospect, be wonderful to be the person who had, or the department or whatever, who had said this has to stop. As a matter of actual fact, nobody in any of those jurisdictions had anticipated the scale of the turnaround. Yeah. Remembering too, Senator, that the problem was hugely exacerbated by a sort of a property crash, but at the same time as there's an international liquidity crisis. I don't think that that coming together of those two things and several others, actually, in terms of, and an economic slowdown in other jurisdictions and so forth, that wasn't predicted. Predictable is a different matter, but the evidence is that it didn't seem to have been. But that coming together, I think, hugely complicated the matter.
Okay, I take it from what you say that nobody in the Department of Finance actually raised their hand and said this is a dangerous situation. They just let it continue the way it was. Can I get on to another question? We've read a lot about the concept of the green jersey with the banks helping each other out, particularly in the specific case of Irish Life and Anglo. But it was something which apparently was current for the whole of last year, where the banks were under official pressure, or certainly request, to help each other when they were in difficulties. And it's certainly been used in the case of the Irish Life Anglo transfer of $7.5 billion, maybe $8, as some sort of a cover. Could you tell us something about the green jersey? Were the banks, was the department aware of the green jersey instruction or urgings that were going on to help each other in this situation?
What was the green jersey? I'm not sure I like the phrase, but there was certainly an amount of urging from the central bank and the financial regulator, of which the Department of Finance would have been aware, to institutions to ensure that, or to allow the normal liquidity interactions that happen as between banks to continue to happen. And that therefore meant that, obviously, what we didn't want to have happen in Ireland was what was happening in many other jurisdictions, which is that where Bank A had extra cash at a particular time, and Bank B was short cash at a particular time, that they wouldn't lend to each other, because that's how interbank markets operate normally. They normally operate more internationally than was becoming the case, because there seemed to be a renationalization of the market. So people would be saying to us, and obviously it's the anecdotal evidence that the Senator was talking about, it's hard to pin down, but people would be saying to us, well, look, we would normally have got X amount from France, and it doesn't seem to be the case that the French are lending internationally now. No, I just say French, it could have been any country. So there was certainly an encouragement to the market to try and keep the normal mechanisms going and operating, and I think that...
Did that extend to helping each other?
Well,
were they being encouraged to help each other? You know what the green jersey is. It's been all over the papers. You know.
Yeah, I know what you mean. But what you're really saying is, did that extend to suggesting to institution A that if institution B wanted a transaction which would be out of normal course and slightly dodgy, but they should do it anyway because it would be a help? Well, I don't know. I've no evidence at all that the green jersey agenda, if you like to call it that, was being pressed in that direction.
I'm not asking about anything dodgy.
Okay.
Of course, you wouldn't encourage anybody to do anything dodgy. I'm not suggesting that.
Well,
and they might do something dodgy anyway, but not certainly with your sanction.
I wouldn't be asking that.
No, certainly. But was there? Which is used by them and by the banks, and it's come straight from the banks, and it's on the record from the banks. Was there an approval by the Department of Finance for the banks to help each other when they were in difficulties, if they were legitimate, of course legitimate, but to help each other if they were in difficulties, certainly in short-term funding.
Well, it was certainly the Department of Finance wanted, but was not in direct contact with the institutions on this issue, to the best of my recollection anyway. The Department of Finance wanted institutions which had cash to operate the market in such a way as it would be of assistance to the whole market.
To each other, in other words.
Yes, well, of course. I mean,
mutually helping each other in difficulties.
Mutually, I mean, if you help the market, you help each other, because there's only, as far as in terms of the domestic interbank market, there's not that many players. So, of course, I mean, it would be entirely remiss of us not to want to see the market continue to operate at a time when it was under stress. In terms of how that operationalised, well, it wouldn't have been us, we're not the liquidity authority, that's more the central bank, so it wouldn't have been us in direct day-to-day contact with the institutions back at that time. Now, obviously, since the guarantee and so forth, our day-to-day contact with institutions has considerably increased. And there have been instances where we've been more directly involved in issues of liquidity, and I'll give you an example would be in relation to the raising of monies under the guarantee in terms of in terms of a sort of bond issues and so forth. There was a point at which the institutions were afraid that, well, the first lot of bond issues under the guarantee would all happen at once and therefore would fail because there'd be too much supply of paper all at once. And certainly the department, they coordinated that between themselves, but with the department's assistance and with the central bank's assistance. But I don't think there was anything that, let's say, that would be, I'm not aware of any evidence of anything that would explain illegality or deliberate misleading of markets or whatever. Off the top of my head, anyway, I can't think of anything like that. But it has been, just to be clear, it's been a most unusual and difficult time. So there have been moments when we would have had to question even ourselves whether Action X is the right action, both in terms of supporting Ireland as an economy, and also in terms of transparency and making sure that the world is aware of what we're doing. So, I don't claim that there's perfection either in the Department of Finance or in any part of the financial system, but I don't think, I've a sense of what I think you're getting at, and I don't think that there was anything in our actions that would have gone as far as I suspect you're wondering.
Could you just tell me something? And I really don't. I have no idea what the answer to this question is. What was your relationship like with the banks and with the financial regulator? How often would you be in contact with them? How often would people be on the telephone to them, talking to them every day, every hour, every month? How often would you meet them? What was going on there? Was it a close relationship or was it very distant?
At what point in time? I suppose I could give you a flavour of how it's developed.
Before the crisis was recognised, say in 2007, 2008.
Okay. In 2007, I would have had personal,
but don't talk about the department. Don't worry about you.
Talk about the department. The department would have had contact with the banking system, in particular through its representatives in the IBF and so forth, and with the larger banks as well, and their specialists in these matters. I would have thought weekly anyway, but it would have tended to be on probably more than weekly, and it would have tended to be on legislative matters, European law, on tax matters, and so forth. In other words, there was a process of the department trying to learn what was going on in the market so as to best shape the legislation or the European agenda or whatever, and the banks the banking system trying to help us in that, and also obviously trying to influence decisions in that regard.
Banks lobbying you all the time?
Well, it depends what you call lobbying, but if you talk...
Trying to influence decisions?
Yeah, they are. Yes, of course they are.
Yeah.
Yeah, regularly, very regularly. But it's very often not so much about, the bulk of it is not so much about influencing decisions of principle. The bulk of it is about influencing technical decisions. In other words, if such and such is going to happen, what's the way that technically works best from their point of view, which very often, not always, is what works best from the citizens' point of view as well.
Would you be nominated? Would you be aware of what the regulator's thinking was all the time?
As regards the regulator on those kinds of issues, the ones for which we have a clear remit, we would have been talking to them, again, much more than weekly, because they would have been on almost any committee that has, for example, that is a consultation on either a legislative matter or a tax, well, not so much on tax, but certainly on any thing to do with the legislation governing the financial system. The central bank and the regulator would be closely consulted.
Did you ever express concern? Did anybody ever express concern to the regulator that the regulator was getting the whole judgment of the exposure to the property market wrong?
I can't think off the top of my head personally of an instance where there was I'll say it this way, there was a formal approach. I can't think of an informal one either, but a formal evidenced approach that said, here is a significant weakness in this part of the process. Not back in 2006, 2007, which is the time frame. Later on, obviously, as the international situation became much more fraught, the consequences of that, in conjunction with the domestic downturn and the impact of that on the property market, those things became evident, but they were becoming evident to more or less everybody at more or less the same time, I think. Now, in recent times, if you like, to sort of contrast that with what was happening in 2007, the extent of contact with individual financial institutions that the department has is much greater. Is much greater now, and on different issues. And that does raise questions for us as to, what's a Department of Finance issue, what's a regulatory issue, and so forth. And we've tried to be careful about that, but those issues do arise. So we are in a different kind of contact, greater contact, at a more senior level on average, on much more important issues with the bank, and much more domestically important issues than would have been the case 2 years ago. But you would expect that if you're in a crisis, there's more happening. There's more communication, or you'd hope there would be than in a non-crisis period. The interaction with the regulator is also different, and roles have changed. Both under legislation, roles have changed. Remember, that's a fairly important feature. The guarantee is the government's guarantee. The regulatory issues associated with that and the control of risks are handled by the regulator, but it's more under a delegation, and there is more sort of issues being brought to our attention. We also now are investors in financial institutions, both investors in and, from the point of view of other financial institutions, potential investors in. Financial institutions are, in making their own strategic plans, much more conscious of what the government plans might be. The NAMA process is coming along, so there's more interest in government intent on that. And there is, appropriately, I think, a much more fluid, at least I hope appropriately, but certainly a much more fluid judgment of responsibilities as between the official bodies concerned. We're not, if there's a problem it's been a year in which there's been problems daily, weekly. If there's a problem now, the official system is not likely to stop and spend too much time worrying about exactly whose responsibility it is to talk to X or talk to Y. The impetus has been to get the job done, and there's therefore been a more organic interaction between the institutions and less institutionalised, I think. But it's still important to have enough of an institutional separation that people do what is, know what their particular responsibility is and try to get it done. So it's quite a different scene. Quite a different scene.
Sorry, Senator, just to bring your attention to the fact that there is a vote in the chamber. If we'll suspend so for a few moments.
Thank you very much. Yeah.
And we'll come back to it for a few moments. Okay. Senator Ross is in possession.
Right, okay. Yeah, I was just trying to establish, I think we can establish you didn't put your hands up and say, look, that we're in mortal danger and that the banks were behaving recklessly and that the property market was on fire, which I think is a pity, but I don't know whether you're meant to be monitoring the regulator or not. I don't know what your relationship is with the regulator. Are you meant to be monitoring the regulator in the Department of Finance or just informing the Minister of what's going on? I mean, you have all, as you say, you talked about regulatory structure, so you presumably have a fair knowledge and responsibility for what's happening in the regulator.
No,
do you monitor it?
We don't have responsibility for what's happening in the regulator.
Do you monitor what it's doing?
Well, we have a it's just difficult to describe the relationship, but we have a fairly detailed relationship with them, mostly to do, at least back in the 2007 period we were talking about, mostly to do with structural and technical and legal issues.
What about solvency and liquidity issues?
The solvency and liquidity issues are and have been a matter for the regulator, but obviously as they become as they reach the critical pitch that has been the case over the last the last year or so, obviously they become at that stage government issues because they have a because the regulator doesn't have a purse, I suppose. But the what's the phrase? The advent of that domestic standing group structure from around about the middle of 2007, I suppose, would have been bringing us more and more into a sort of an ongoing dialogue on those issues also.
Okay, can I ask you about principles-based regulation then? When did that actually happen? Were we always principles-based?
Well, I'd almost rather, we were in private section for this phrase, but it's not, because I don't mean it to sound wrong. Personally, there is nothing in the legislation in relation to the financial regulator that uses the phrase principles-based regulation. The legislation set up a structure and an authority, and the authority naturally had to make decisions about how it would regulate. And it chose the model, or the motto, I suppose, the cultural phrase of principles-based regulation as how it would, as its general, as the general tenor of its regulation. Now, frankly, there's absolutely nothing wrong with principles-based regulation, because that may be a different question, but in terms of what principles-based regulation is supposed to mean, it is that the actions of the regulator and of the regulated would not be judged entirely on the, principally on the basis of sort of box-ticking exercises, and have you complied exactly with this piece of technical or that piece of technical instruction, but would also be judged by the against the principles that of sound management and sound regulation and so forth. And in that sense, principles-based regulation should be a stronger system, because it should. It should not, it should be more than just a technical exercise. It should be a governance exercise, a cultural exercise almost, and it should be stronger. Now, what's actually turned out, I suppose, in the wash, especially under the recent strains, is that there are shortcomings with the regulatory approach, which have been acknowledged by the regulator and by the minister, and that changes have to be made to that. And as a I hesitate to give a purely personal view, but as a purely personal view, I'm not so sure it matters what you call it so much as what you actually do and the behaviours that underpin it. And what the minister and the government's choice in that regard is to try and underpin behaviour. A more rigorous, more closely monitored system, more expert system will be underpinned by a structure that brings the sort of macro-prudential views of the central bank perspective into even closer integration with the views and understandings of the people who are regulating individual institutions on the ground. But my view, Senator, is that that's not just about legislation. It's also about expertise and cultural change. And it doesn't matter whether you call it principles, rules-based, or whatever else. It's what happens that will matter.
Just a final question, Chairman, if you can have one. To your knowledge, did anybody, at what stage did people in the department know about the 7.5 billion transfer between Anglo and Irish Life? And what did they do about it when they knew about it?
To the best of my knowledge, and don't quote me on the exact date, but it was the 20-something of October. And what was done about it was that the official concerned picked up the phone.
Sorry?
What was done about it was that the official concerned picked up the phone and said to the financial regulator, you have this report, we've been reading through it, presume you've seen such and such a transaction, but in case you haven't got to that yet, this would have been a report that came in the previous day, and people would have been, both in ourselves and the NTMA and elsewhere, would have been reading through it, and presume you've seen that, and bring it to your attention in case you haven't. It's something you might like to consider.
What happened then?
From recollection, the regulator has published a detailed report on what it did with that information, but it carried out various actions in that regard, including talking to the institutions concerned. I think, I don't like to get this, in case I get the sequence of events wrong, you can refer back to the regulator's report, but my recollection is that was at the end of October, and that there was further follow-up later on that.
Did the regulator know about it when they were rung up about it?
I can't, well, it's hard to say, to be honest, because there would have been several people at reading the same reports at exactly the same time. So this would have been the first edition, if you like, the first draft of a significant PwC report. So it was being read in the NTMA and in the Department of Finance and in the regulator at more or less the same time. So
I was just trying to establish if the regulator knew about it before they read the report.
Oh, sorry. Well, I've certainly no indication of that.
Okay. Thank you. Thank you,
no, sorry, don't get me wrong. I would refer back, if I were you, to the regulator's own report, because there may have been some interactions as between the people on the desk, if you like, and the financial institution concerned before that. I just can't recall the exact sequence on that. In the regulator
report before the Department of Finance and the NTMA. I suppose that's the key question.
I think it must have had, because pretty much simultaneously, Deputy. But the report was commissioned by the regulator, so I presume, from recollection, what would have happened is the regulator would have got a copy and would have shared it with the appropriate people.
Would you not have caused? What view did you take to the fact that the financial regulator hadn't picked up on the issue prior to the people who had commissioned the report? Hadn't picked up on the issue prior to it being brought to their notice by your good selves?
I didn't say that, Deputy. What I said is I don't know whether they had or not, because people would have been reading this around about the same time, and therefore, for all I know, there was 20 people in the financial regulator had picked up on it. But I don't know that. Well, there would have been 20 people reading it clearly, but I simply don't know whether they had or had not picked up on that particular paragraph of the PwC report. Either just before or just after the Department of Finance made a phone call. I know that the NTMA picked up on it just before we did, because they had talked to me about it. directly, so there was a sort of a thing.
Communication for financial regulator on that particular issue prior to the Department of Finance making that call.
I know, but we wouldn't have had Deputy, because as I say, the thing was only in a day or two, and this was towards
the NTMA had basically made a phone call to yourselves.
So, well, see, what was happening was the NTMA had, and it's turned out to be a very an exceptionally helpful situation to have in, because we have a National Treasury Management Agency. The Minister has a source of advice which is more specialist than, you know, the sort of regulatory legislative advice that he gets from the Department of Finance, which is hopefully well informed but is not, you know, we don't have the same direct market expertise as the NTMA would have. So the NTMA is there, and it has been providing throughout this period advice to the Minister, and there's a part of the NTMA Act that provides for the Minister to seek their advice. So they have been integrally involved in all of in the various processes that have been happening since last year, and frankly, it's been hugely helpful. I mean, I think the quality of our response would have been hampered had we not had that. So they were, as part of that, involved in that process of reading through the reports. We were, the regulator was. It probably, the phraseology of the thing was just stated as a bald fact. Such and such a transaction took place. I suppose the exact significance of the transaction, apart from that it was large, you know, would have probably jumped to the forefront of their minds quicker than, say, to the forefront of mine. But you know, it was anyway. You know, we saw the issue and we brought it to the attention of the appropriate authority in this regard.
Sorry, I didn't mean to. I just want to thank you for appearing. My apologies for being a bit late. I may be just going over some old ground. I just have two questions. Firstly, the new system you're bringing in is very, very similar to the system pre-2004. I know there's some variations, but you're effectively separating, you're bringing back under one umbrella again. And under that watch you had, we'll say, scandals like Ansbacher and the Dirt inquiry arising out of the financial regulation system at that time. What do you believe that the new system will bring to ensure that that doesn't happen? That's number one. Number two, we just had questions with the Minister for Finance, but one of the particular questions was that you know, I suppose the question really I'd be asking is that the whole issue with the fixed rate mortgages, that you'd received a report from the Irish Financial Services Authority and whether banks had matched fixed rate mortgages with their own borrowings at high rates, which would justify the application of the high breakage charges. The point I'm making here is that when the Minister came back, he stated that the financial regulator had been in touch with the banks. The banks had come back and the banks had provided their own actuarial advice, but it wouldn't appear as if any verification work had been done by the financial regulator itself at this time, even though the Minister qualified his response by stating that they would be looking at sample verification going forward. Didn't give a date. Now the question I'm really asking is, I would have thought that any report looked into the issue by the Financial Regulatory Authority, they should have adequate expertise to carry out independent verification process themselves. And do you have confidence that the necessary expertise is within the Financial Regulatory Authority at present and going forward to ensure that, if you look back, many of the recent scandals we've had, certainly involving Anglo, one of them in particular involved independent advice being provided by Anglo to financial regulator, which they accepted. So the key thing here is, I found it difficult to understand why the financial regulator hadn't done the verification work on the fixed rate mortgages day one. Very, very simple exercise. The financial regulator bring in their own actuaries. look at, over a range of samples, the rate, whether the banks have been borrowing short to lend long in terms of fixed rate mortgages. Instead, what we're getting is reports sent back by the banks themselves with no, what I would regard, independent verification work being done by the financial regulator. And if proper independent verification had been done, it goes back to, I suppose, the old term was, in terms of accounting, was a balance sheet rather than a systems approach. And if verification work had been done back over the various bank transactions, proper verification could have been done by the financial regulator, I don't think we'd have been in the mess we're in today, the banking mess. So if we might just comment on those points. What will the new system do that the old system didn't do? Because we had, the main reason you changed to the old system, well, I suppose the current system in 2004 was to ensure a more rigorous and accountable and regulatory system over the banking and financial sector, which clearly didn't work. We're now going back to a form of the old system. And are you happy and satisfied that there's enough expertise within the financial regulator to properly monitor and do independent tests and verification of the banking system?
If you don't mind, I'll take the second question first, because the answers come together a bit. The answer is no. Not satisfied that there's sufficient expertise in the financial regulator system as a whole, but nor is the financial regulator. And they are actively trying to beef up their expertise to ensure that.
That's a clear example that for fixed rate mortgages, which is one of the biggest issues for ordinary people out there at the moment, the financial regulator relied on the financial institutions themselves.
Well, I think, Deputy, I didn't see the PQs. I saw the answer, the draft, but I didn't see what the Minister said. But I presume, I hope he didn't depart too far.
No, he stayed to script. Yes, go on.
You like to think you're helpful.
You gave the leading line. We had to.
I think from recollection, what was said was that the regulator had, and I'm not defending their position, but had produced this report and was going back to do the verification. And the question of whether it should produce the report first or not.
I think when the report went out like that, I think the financial regulator should be able to do independent verification as a matter of course. Going
back to the other point you made, the question of independent verification of what comes in more generally. Well, I think on the other example that you mentioned, the regulator is itself very unhappy that maybe it didn't do at the time the kind of, in that particular instance. So I think you probably, one would hope maybe that since they've seen that as a flaw, that they are addressing that flaw. But
we're looking at a current report, and they're repeating the same mode of operandi as previously. Well, will you be looking for a change? I suppose that's the point.
I suppose, to an extent, I can't answer for the regulator, I suppose, but I
just for 1 second, Senator Ross. Sorry, continue.
Okay. So I suppose, sorry, it's okay to continue, is it? Yeah. I suppose the answer to that is that we would obviously like to see a financial regulator that is highly expert and highly competent, and we don't believe that just requires a change of legislation. We believe it also requires a growth and a broadening of expertise. Because, I mean, you would be delighted at the level of expertise in the financial regulator, but you might, for the jobs that people do and what they can do and so forth, there's some very impressive people down there. But you need then a breadth of expertise as well, a broader experience, maybe more market experience rather than just regulatory experience, a broader mix, and that's what they have been trying to achieve, and that's what the government has been encouraging them to do over the last year or so. So there is a lot of work going on, and it's frankly not that, even in current times, it's not that easy to get that kind of expertise and keep it. I mean, they brought in some some superbly expert people there recently. They've already started to lose one or two of them to financial institutions. Actually, in the particular cases I'm thinking of, we might be quite happy that the financial institutions also needed that expertise, and it might be a positive thing. But just the same, there is there, even within, even allowing that they'll go out and get some expertise, it's new people, you can expect some churn of that, I think, because that's just how the world works. But it's not just about the structure, and therefore it is about the expertise, and it is about building that. And I hope we'll see the benefits of that. But that's really for them to answer to the committee rather than for me. And in terms of what will be different, what changed in 2004 was structure, but also breadth of responsibilities and so forth. And in particular, the new feature of the breadth of responsibilities in 2004 was the consumer focus, and the integration of the sort of both the consumer issues and the attention to detail about management structures that dealing with consumers requires. So there are some people, I hope not in our department, there are some people who are a bit dismissive of the consumer interest, as being secondary. But in fact, a well-managed institution, what's happening in regard to the treatment of consumers actually will very often be a reflection of how well the institution is managed on a general basis. And obviously, the best protection for consumers is to have stable and liquid institutions, but it's also important that individual consumers get treated fairly when they're on the doorstep. So that won't go away. So that will be a significant difference in breadth as between now and the pre-2003 situation. What also won't go away, I think, is the cultural shift that will have happened. There's no one, people are not trying to integrate or reintegrate into a central bank structure so that we can go back to how things were done in presumably simpler times back in the 1980s and mid-90s and so forth. A lot of the legislation around responsibilities has changed since there's a sort of a suite of legislation from about 1989 up to 2003 or so forth that has gradually broadened the role of the regulator. So all of those things will be there, will still, the responsibilities will still be there in the new central bank stroke regulator that were not there in the traditional central bank stroke regulator that you're talking about from the early 90s and so forth. That includes things like responsibility for securities, responsibility for funds, responsibilities for insurance, responsibilities for how all those interact with consumers, responsibilities for what's the phrase now, the listings and so forth that is currently with the stock exchange, but is gradually moving towards the regulator. So all those things will be new. So it'll be actually a much broader institution than would have been the case back in the time you're talking about, where the central bank was the regulator of banks and not a whole lot extra. As to whether none of that changes the fact that I've been trying to stress with the Senator and the other Deputy O'Dowd that really it's not just about the structure, it's also about the culture within the structure. And the proposed change of chief executive, the proposed change of, this is where the expertise ties back in, the proposed strengthening of senior management, the proposed strengthening of middle management, all of those things will help to change the culture, to sort of make it a more attentive, more flexible and more expert culture. The other thing that will change the culture, of course, and it's, it may be stating the obvious, but the absolute shock to the system we've had in the last 2 years will demand a different approach to the world from here on. I suppose there is we have to watch this. It's in any organisation that's been through a crisis, and it'll be the same with the regulator. I've no doubt it'll be the same with the Department of Finance and so forth. There's the shell shock factor. There's the book up factor that people respond to crises and they do up the game and they do become culturally different. They have new experiences that they really learn from. But there can also be a shell shock factor, and we just, I would imagine that the regulator will have to be at least a little bit attentive, not just to the people that they bring in, but to broadening the skill base and ensuring the productivity of the people who are already there and who have, been through 2 years or a year of hell at this stage and have to struggle through that and do their public interest business above worrying about that. So, there's a management job for the leadership team over there. I hope they're doing it. I'm sure they are, to ensure that those people are fully focused. They're taking a beating, but the economy has, people working in banks have, people in the construction sector have, the whole, there's an awful lot of people around our economy who've been through a very difficult time, and we need to just avoid that shell shock factor and make sure that the business of the day is attended to, and they can keep working hard. So all I'm saying really is that there is a management task. And it's not just about getting the new people in, it's about keeping the existing people on track as well. And, that's almost equally important, because, we can't have a situation where we're aiming for the perfect situation in a year's time, but we don't have full attention to detail in the meanwhile. So,
just an observation. I think it's critical in terms of any financial regulation system moving forward, particularly in the current climate we were coming from, that the financial regulator, unlike what happened with this review of the fixed rate mortgages, the verification work, the expertise must be in-house to enable verification work, independent verification work, to be carried out, rather than the situation where you continue to rely, for whatever reason, on, reviews carried out internally by the bank themselves. They'll talk about independent consultants, but effectively they're appointed by the banks. I think to restore trust in the system, it's imperative that the expertise is got within the financial regulator and that you do proper verification on this particular issue. And I asked the Minister for Finance today, Minister Lenihan, that they would look to do a broad review, not just a sample review, in terms of verification on that issue with the fixed rate mortgages. So that's just the observation I would make. It would be important that you might take that on board.
I'll both take it on board, and if you don't mind, I'll send a copy of the transcript down to them so that they'll have seen your comments as well. But can I just respond a little bit on one thing, that it cannot be the case that the financial regulator will run the institutions, and we just have to be careful that we don't try to take away the responsibility for running an institution properly from the people who are its directors and managers. So there will obviously be a lot of the things that they do and they rely on, which they will represent to the regulator. And unless the regulator is to have a duplicate management team, in effect managing the institution, it won't ever get to the point where every single thing that is represented to them will be checked. But
certainly for a period of time until confidence is restored in the banks and the financial systems as they operate, I think it certainly should be considered.
A very heightened involvement of the regulator, even to the point now of staff members of the regulator attending board meetings and committee meetings and so forth on a sample basis. So there is a lot of, in the times that are in it, there is a much closer contact between the regulator and the institutions, and I'd imagine that that will continue and maybe even be extended into other institutions. Yeah.
Deputy O'Dowd,
I just have two questions. One is, Mr. Cardiff there referred to the shell shock factor of what was happening, but I think there was a denial factor as well, certainly in the whole system. And I think that's more telling than just being shell shocked. In fact, people didn't realise what was going on or didn't know. And the two questions I have really are sort of joined together. One way is that you had the political system, which was in denial. You had the administrative system within the financial regulator and so on, didn't really regulate or pick up the issues adequately. But the department itself, when you were replying to Senator Ross, you said that nobody within the department effectively shouted stop on this issue or intervened with the minister to say, look, it's out of control. The economy is in very serious difficulties. So the question I have is, you referred there to legislation that part of your role is to think forward or think what new legislation might be required given certain scenarios. Could you expand on that a bit? Does that mean a doomsday scenario you'll be thinking about in terms of financial regulation? And the second question is, notwithstanding all the changes that are taking place within the central bank and the regulator, what changes are taking place within your organisation, within your administration? I'm talking about the civil service. I accept the point that you're making, that you can't regulate the regulator in one sense and that you have to let them get on with the job. But the fact that, say, commentators like, I think, David McWilliams and others commented about the overheating of the economy, the trauma that was in front of us all, like, what changes are you making to make sure that you have a broader and a deeper understanding of those issues and to be able to respond perhaps more quickly than you actually did? And speaking collectively rather than personally in your case.
I appreciate that, Deputy. And just to be clear, I don't think I quite said that. I think I gave the Deputy a strong hint without breaching the usual convention that we don't comment on exactly what advice was given to ministers at exactly what point. But certainly, as I said to the Senator, it would be nice to be able to look back and say that there was a point in time at which the department had greater foresight than the rest of the world, or even than and maybe it should, but and say that. But
David McWilliams say, like, yeah. I mean, the point I'm getting at, I'm trying to look forward.
I know you're quite right, and yeah. So are we, and we're trying.
But like, the country are very angry at what happened. They're angry at the political system. But we can't just. There's a structural deficit there that the administration is responsible for. I'm just, extract from the sum all of these external other issues. What are you doing as a department to ensure that you're on red alert for these issues and pick them up earlier?
Okay, well, I'll tell you that, Debbie, and just don't get me wrong. This is the biggest economic crisis we've been through, and it would be wrong of us all not to look back and try to work out how we got it wrong and try to do it better. So I've no quibble with your question. It's perfectly appropriate. In terms of what the difference will be and so forth, you mentioned the contingencies, that sort of legislation and so forth. What I had in mind there was just to give an example. On the day that the guarantee was announced, back on the 29th of September, or the 30th of September, I suppose was the announcement, we were confident that we could produce the legislation to back that up within a day or two. And the reason we were confident of that was because although that particular bill had not been drafted, there was an awful lot of drafting work had been done in and around that, so that we could produce, based on the work already done in the Department of Finance and in the Attorney General's office and so forth, we could produce a bill which, with the enormous assistance of the Oireachtas, was put through very quickly. And by putting the bill through very quickly, it gave a huge credibility boost to the guarantee, especially in the first couple of months, in terms of its legal robustness. The market looked, and the people looked, and the depositors looked and said, well, we believe in that guarantee because we're not going to have to wait 3 months for it to be put into law. It'll be there within a day or two. So in that sense, it's that kind of thing I was talking about, that we would have at various times been preparing legislation. When Anglo was nationalised, again, that legislation was produced very quickly, in large part because much of it had been pre-drafted. Not with the word Anglo in it, but with, on a contingency basis. So that's all I meant by that kind of thing. I'm not trying to suggest there was anything, a huge doomsday plan, but it's that kind of thing. In terms of the changes, in terms of, you mentioned the denial factor. Well, I hope we're not suffering from that. If we did, I hope we're not now, because there's a
legal system was in denial.
I think the government administrative system too. That
3 months.
Just Deputy, the administrative system as much And, you know, as I said, there will need to be an awful lot of thinking between us all as to how we make sure this kind of thing doesn't happen again. But in terms of the changes in the Department of Finance, our immediate changes are to deal with the immediate issues. The division that I run was the Tax and Financial Services Division. It's now just the Financial Services Division. It has about 18, 20 people extra over what it had. Those people, though they're sort of general service civil servants, were picked you know, to try and give us a boost of expertise. The total
Or in your department?
in the department is about 600. In the division,
Total number in the financial services division?
in the Financial Service Division is about 40, around about the 40 mark.
So that's you've doubled in size.
Doubled in size.
The question, just maybe if it's helpful, if you have commentators who are sort of outside the normal, like, commentariat or whatever you want to say, like, is there anybody reading those articles? Is there anybody, you know, how, you know, there are people out there who are independent commentators who make very, you know, make very significant contributions, and if they had to have been picked up, you know, collectively, had to been taught perhaps more about that your early warning systems, you know, might have been more efficient.
Yeah, well, I mean,
I'm just really trying to say to you is that
is there a system? Well, the other thing we've done in terms of the resource, the 40 people is not, you know, a lot of them are still doing what was the day-to-day work of making sure we service our European obligations and our legislative obligations and so forth. But we also have have additional legal resources which we've, you know, tendered in or went out and got. We have the additional attention from our friends in the NTMA, which, as I think I said, has been a crucial determinant. It's not that they have big numbers of people; it's just that the people are very good. And, you know, we're looking at ways to get in particular expertise that we haven't had up to now in-house, and, you know. But
I just and I appreciate your.
But I think I'm getting to your point is that we also need to have a better macro perspective, and I think that on the sorts of thing you're talking about of people reading the commentators and so forth, then, you know, we're all of us doing that, and we're also relying on the people that we have as advisors, who are the NTMA and
the key commentators that would have been saying, contrary to that government policy was wrong, that the economy was overheated, the property market was going to collapse, we were facing, you know, negative equity, like all of, you know, like those points which were made publicly. You know, like when I think it was former Taoiseach said, Mr. Ahern, that if you're running down the economy, you should go off and basically commit suicide. I think he reported to have said something like that. In other words, I'm just, you know, how come people in the Department of Finance didn't insist on change of policy, basically, given the trends and the facts, the things that were going on?
And I will just be careful here. There is no official who is entitled to insist that the minister adopt.
Nobody warned.
I didn't quite say that, but I think I gave as honest an answer as I can without breaching any convention, Senator. But it is not the role, but just the way you put it, insist. It's not the role of civil servants to tell ministers how to set policy. That is. It's to advise, to assist, but not to instruct. I mean, that would never be right. But
can't instruct. But what I'm saying is, was there not, you know, for your eyes only, Minister, we think that the country is going down the tubes. You know, nobody wrote that.
Well, I don't think we wrote that any stronger than the consensus sort of economic view would have been around.
Was your view that things were pretty well all right and on course then?
No, I think again, you'd almost have to set a time frame. And
2007.
Well, look, ministers responded in a policy way as they saw appropriate to the advice they were getting from us and from elsewhere. But I can't say that we were, you know, we had any greater foresight than
any feelings of forebodings from the impression I'm getting from you.
No, I didn't say that. And
No, but it's the impression I know you didn't. But you,
well, look, I mean, I can't bring in here every policy document and every discussion we ever had with the minister and set it out for you. What I'm saying is that it is my personal view that the department and others would, in retrospect, like to have done a better job of seeing what was coming. It is a certainty that lots of other people got it wrong too. But they're not the people with the responsibility for advising ministers. We are, and we try to do our best in terms of improving our forecasting of the overall economy, which feeds directly into this issue. We have been trying to improve on an ongoing basis our processes, and we always do. But it was not foreseen. The coming together of so many negatives all at once was not foreseen either by ourselves or, I think, in truth, by almost anybody else. But
I mean, the Taoiseach of the day, which presumably was reflecting, the Minister of Finance of the day, who's now the Taoiseach, which is presumably reflecting the views of the department, was still saying in 2006, and I think in 2007, that the fundamentals were sound. It was an expression he continuously used. Was that the department's view?
Well, in truth, Senator, I don't think that anybody else was saying every that thing there. Just I think this is a speech by the Taoiseach. As I took up office as Taoiseach in May 2008, the experts in the IMF, OECD and ESRI were predicting economic growth of over 3% this year in 2009. They are now predicting a contraction between 8% and 10%. I mean, there wasn't a general broad knowledge or understanding out there that things were going to turn as fast and as rapidly and as seriously as they did.
Well, Richard Curran, property shock.
Well, certainly
there have been warnings from various economists.
There was certainly a view that there was a shift in the property market and likely to be significant, and I think that was built into a lot of what ministers were talking about and doing. But the scale of it, the interaction with other issues, including the global liquidity shock, the scale of the banking crisis worldwide that exacerbated our domestic issues and so forth, none of that was fully understood or predicted almost anywhere. And well, it would be, as I said to you earlier, it would be lovely to be able to say to you that we did predict it. You know, it would be nice to say that any difficulties would have been, you know, would have been overcome had the world just listened to somebody in the Department of Finance. But that's not the case. We were not far away from the consensus view, and the consensus view was of a downturn but not a catastrophe. The consensus view was of a shift but not an inversion, and the department wasn't was in and around that consensus in what it was doing. But in fairness, Senator, I can't comment on what, you know, on I can't comment and give a different view from what the minister of my department or of the government is given, because they're in charge of policy. That's how our democratic system works, and I'm not going to be taking a political stance that our policy stance.
So at the end of the day, like, if the key point is that if somebody really felt very strongly about it, they would have put the memo in or whatever. Notwithstanding the fact the minister may not have agreed with that opinion. Like, is there nobody, and it goes back to Senator Osborne, there's nobody in the department wrote a memo, nobody, but notwithstanding the fact that the minister may not have agreed with it.
There are
I'm not trying to put you in.
No, you're not.
I'm just trying to say, is there nobody in there at all? Like,
there's an awful lot of people. There's a lot of people, Deputy, and they're all working very hard to produce.
An awful mess, and part of the accountability and responsibility that is a political accountability. But within the civil service, I'm just saying, was there never a view to say, hey, look, this is what I think, and I really feel so strongly about this that I'm going to send it to the minister, and that's it. That never happened.
Well, ministers and the government and the Minister of Finance would have gotten at various times advice and information from the department that would suggest policy directions and would talk about not just what the central forecast was, but what the risks around that were. I think it was the budget at the end of 2007 that outlined, I suppose, which is just before the things changed rapidly, which outlined the expected position over the coming year or two, or three, but also listed out risks to that scenario. And from recollection, the budget speech listed out about 6 risk areas that had to be watched. And I think by the end of the year, not just 1 or 2, but all 6 of those things had happened. So I think if you looked at other commentators, they would have been saying much the same things. There was a set of risks. Government was aware of and made aware of those risks, but nobody said to government, that I would imagine, because I don't think anyone, credible commentators around were saying that all 6 of these things, or all five of the 6, or whatever it might be, were likely to come to fruition at around the same time and in such a hefty way. But I think what we can all conclude, though, Deputy, and not to escape the point, is that we must all strive to do better, because what has happened is of a scale that is disruptive to people's day-to-day lives, and we have to now try to, it's not a policy statement, it's just a civil servant talking. We have to try to ameliorate the effects of this on the people we try to serve, and we have to try and stabilise it first. Because there's still a fair degree of crisis out there that we have to try and stabilise. And
can I just make a point that the IMF, in their recent report, which you've received, were quite critical of the 2007 budget. They said there was too expansionary in layman's terms, and that, like in your budget statutory memo that you would have sent to Cabinet in July of, we'll say, 2007 regarding, we'll say, the forthcoming budget, and the fact that, we'll say, the IMF and the RSI and everyone else was basically saying that we had a major property bubble coming. They were saying that back as early as late 2005. Would you have been promoting such an expansionary budget for 2007, or the views that were expressed by, I think that's the key really, and certainly the IMF were quite critical in particular of the 2007 budget.
The IMF, in retrospect, are pointing out all the things that might have been wrong with the 2007 budget, and that's appropriate, because what they're saying is, here we are now, how have we gotten here and how do we get out? And it's useful for us and for commentators and for members of the Oireachtas and so forth to have that view. But like their view, I think I have it here. This is the IMF's figures for both 2007-8. I don't like to just quote from some that someone else has written, but they showed structural surpluses, a structural surplus of 0.7% of GDP, presumably for 2007, and a 0.5% for 2008. They weren't saying it really at the time, and that was because they didn't have the sort of they're very good people, but they're also not capable of forecasting the future with precision.
Did you at the time feel it was appropriate to have such, now looking back, such an expansionary budget in 2007, considering that the winds of change were already in the air? And I think ordinary people outside there were well aware of it. The property market had been slowing down since July 2006. The question is, did you feel, we'll say, as officials in the Department of Finance, that the brakes should have been put on?
Well, to be honest, Deputy, I'm not even going to answer, because as I've said, I can't, as an official, comment on policy choices that were made by ministers. It's not how our system works. if I were to do that, then ministers would have to watch their backs every time an official turned up in a committee.
Did you present, as Department of Finance officials, did you present different options to the Minister for Finance, the current Taoiseach Brian Cowan, at the time in advance of the 2007 budget? Would you have presented alternatives? I presume that would be the norm.
Yeah, well, in any budgetary cycle, we present a large range of scenarios for ministers. How it would tend to work on the, for example, on the tax side would be that, on the expenditure side too, was that there would be a set of memoranda to the minister. Typical budget, the tax memoranda, there'd probably be 50 on different issues. 2 or 3 of them being the crucial ones that would deal with the main tax heads. At the same time, the minister would be getting similar advices and so forth on expenditure items and the expenditure picture, and there would be various meetings and so forth to bring those together. And options, a range of options of various kinds, would be discussed, and the pros and cons of all of them.
So you did provide alternatives at the time. I mean, the question
depends
really,
what you mean. We provided advices on a whole range of issues, that go into putting together a budget and an expenditure package, and we obviously would have discussed with the minister in detail the various issues and packages and so forth.
Would the Department of Finance officials have had concerns at that time that there was difficulties in terms of the economic climate going forward in Ireland?
I think we would have had the same concerns as economic commentators generally would have had, and that those would have been reflected in our advice to ministers, and indeed were reflected in the ministers, from recollection. And again, you're trying to put you're trying to put me in, I think, in the situation, Deputy, where I'm either defending the minister or attacking him. I'm not. What I'm saying is that the minister, at the end of 2000, in that budget,
A broad overview of how the Department of Finance actually works.
Well, to be honest, maybe Deputy, there's no problem giving you that. But if you want to do it in a situation where I'm expected to comment on the minister's policies, that's just not how. It's not part of my brief. But certainly, if you wanted a view of how the Department of Finance works, or of how the budget, the budgetary picture tends to come together, what the processes are and so forth, we'll happily host yourselves and any other members of the committee that want to have, and we'll get someone to talk you through it.
Okay, thank you very much. We certainly will. Now, I think that concludes our meeting, and I would like just to thank Mr. Bosan, Mr. Cardiff, Mr. Horgan for your attendance today, and for the lengthy discussion that we have had, and we look forward to discussing with you in the future. The meeting is then adjourned until next Wednesday at 1:30, where we have an economic or regulatory degree in regulation with us. So thanks very much.